Ron with Towerside Realty and Rocket Mortgage here to share some insight with the economy, real estate, and lending markets that might impact your decisions as you move through your life. This week was a little better in the market itself for the economy, showing that the increased inflation is slowing down. That's good signs. That really helps in all kinds of ways. And we saw that unemployment numbers were way down, but the job creations have also slowed. So all those numbers kind of don't mesh so much, but what is good is if inflation is not increasing as high as it has been, it starts to come back to what the Fed's target rate is, which is below 3%. It's in the twos. Where we get there or not, I don't know, but it's definitely slowing down. That in itself helps with mortgage rates. Rates have started to come down a little bit in the last couple of weeks. That's really positive because we need that because as we don't see any real estate houses come on the market, that keeps prices to increase. And we all, homeowners, like to have increase in pricing, but as if buyers out there, you need to make it sure that homes are affordable. So we need a balance, and that balance is coming. This year, we still had home prices increasing. The real estate market is very stable right now. We're not seeing any decreases. Let's see, the new construction communities, they're not really coming off their prices as much. But what they are giving is incentives. I've seen incentives in $20,000, $30,000, $40,000 in incentives where they could use it for upgrades or buying down rates and things like that. What we do have though is a shortage of inventory. A lot of homeowners are not wanting to sell their house because they don't want to give up their 3% or maybe lower rate to trade it in for a rate that's in the 7% range. So that reduces the amount of inventory, which keeps prices high and elevated. And whenever rates were going increase as much as they were, there was a lot of talk that house prices were going to start to bottom out. I have not seen that, and I'm not seeing it. Home prices are very stable. What I do see, though, is rates starting to move their ways down. And that's going to help loosen up some inventory as people get to the point where they just really need to move on to the different home. We are starting to see a lot more refinances where people have got a lot of credit card debt and need to roll that all in together to have one payment to help with their cash flow. So there are some individuals that are starting to give up those 2 and 3/4 and 3.5% rates and trade it in, and because their credit card rates are in the high 20% range, and it just makes sense for them to just roll that in together for cash flow, meaning what they have at the end of each month, and that might make sense for them. So we're starting to see some refinances happening, which then can turn to a little bit more real estate housing. More houses on the market, which can help bring some prices more stability as we have more inventory, which balances the market in itself. Outlook for the year, we'll see, because everything that's been predicted hasn't happened. We got to take this day by day and see exactly what's happening in the market for what's going on, and we get information out every day, and I'll continue to share that as we can. And share information for you. I can say this confidently. The housing market in Central Florida is very strong, and in Florida in itself is very strong. There'll be some price adjustments from here to here, but what we are seeing is there are buyers in the market. They're wanting to buy homes whenever they can find the home that is move-in ready that they're looking for. So there are buyers in the market. There's people moving from whether it's moving for job reasons or for house size or whatever. There is still movement in the market. We're seeing a lot of positive growth in different ways in the economy. So things are strong. It's just stuff is really expensive, and we're going to start to see, most likely, I believe, mortgage rates come down a little bit. I'm not sure that we'll ever see the 3% range again, or even 4, but we could see somewhere in the 6% range, which is actually a healthy market. That is actually where rates are need to be to have a healthy, stable economy, and we'll see if we get there, and we'll find out. So I hope this information has been helpful. Stay tuned. I'll keep you up to date in the real estate market, in the lending, in the economy, and bring you these little short videos to hopefully help you out. So take care, and thanks for watching.